again, and Reliance Industries has come out with Q2 FY24 report card, and which is in line to the ET now estimate. Like you can see on your screen, the revenue, PAT as well as margin has come in line on a consolidated basis. Definitely we will talk about the numbers, but taking through all the headline numbers, then the net profit has come in at 17,394 crores. That's a jump of 9% sequentially. EBITDA margin clocked in at 17.7%. The EBITDA has seen a jump of 8% sequentially, and onto the top line a growth of 12% on a quarter-on-quarter basis is what we have witnessed. Onto the segmental performance as well, we have seen their OTC business rather doing a bit well because it has seen a jump of 11%. But let's get in more details on Reliance earnings then and how the segment has performed this time around. Let me welcome Somit Sarkar, my colleague. Somit, take us through the numbers. How are the numbers this time, and anything exceptional that you are looking at now?
Well, if you see on a broader basis, the numbers are pretty much in line with what the street was expecting. On the EBITDA front, if you see, the street was expecting the number to be close to 40,300 crore rupees. The company has reported an EBITDA of close to 41,000, I would rather say. So it's a marginal beat that is coming. But on the net profit front, street was expecting a net profit of close to 17,840 crore rupees. The company has reported a net profit of 17,400. Now, segment-wise performance, if you see, the street was expecting the O2C and the retail segment to lead the higher growth, but the jump on a sequential basis was expected to be much higher from the gas exploration business. Now, the street was expecting the gas exploration business EBITDA to be 23% higher on a sequential basis, but it's actually come in 19% higher at close to 4,800 crore rupees, roughly. If you see, the exact number is 4,766 crore rupees. Now, the reason behind this higher sequential jump is the fact that gas prices were on the higher side, while the gas production also for in the exploration business was on the higher side. Now, when it comes to the O2C segment, that is the key or the higher contributor to the EBITDA number, that has jumped in around 6.6% on a sequential basis. The number has come in at close to 16,300 crore rupees. Now, this is on the back of the fact that the gross refining margin on a sequential basis were higher, and that's the reason why the GRMs for Reliance Industries were also higher on a sequential basis, and hence the O2C segment number has come in at 16,300. Now, when it comes to the retail segment, the street was expecting the retail segment EBITDA to be close to 5,400. Company has reported a 5,800 crore retail segment EBITDA, which is slightly higher than what the street was expecting. This could be purely on the back of higher footfalls and the store expansion that Reliance Industries has been continuously doing for its retail business. Now, a while back, Jio also came out with its numbers, which were also pretty much in line with what the street was expecting. We are yet to get the ARPU and the subscriber numbers, but on the EBITDA front, 13,000 crore is what the EBITDA street was expecting. The company has reported an EBITDA of 12,950 odd crore rupees. Margins have been largely pretty much stable on a sequential basis at around 52.3%, and net profit has jumped in 4% higher for Reliance Jio at around 5,058 crore rupees. Now, we are talking about Reliance Jio and not Jio Platform, which is the digital arm, but we are talking about Reliance Jio, which is the telecom arm of Reliance Industries.
Well, yes, absolutely. So just the ARPU number is what we are waiting by, but the numbers are looking in line, and we just got the numbers, Somit. The ARPU is now at 181.7 rupees per subscriber versus 177.2 rupees last year. How is the number versus the expectation?
Well, street was expecting the number to be close to 182.5. The company has come in with 181.1. So a slight miss, that I would say. Not a larger miss, but pretty much in line with what the street was expecting.
Pretty much in line, ARPU number coming in from Reliance Jio, as well as the company also informs that the net subscriber addition accelerating to over 11 million now, and that's the update on Reliance Jio front. ARPU just marginally lower to the estimates, but with this, let's connect with the expert and understand that how is he looking at the numbers. We are being joined by Mayuresh Joshi of William O'Neill. Very good evening, Mayuresh, and thank you so much for your time. Reliance earnings are out, looks like in line versus our estimates. What are your first readings? The OTC business was expected to perform rather well, and this is exactly what we are seeing on the number front. What is your reading?
A very good evening. I think, yes, I think what the street was probably expecting, the O2C business to probably do well and the retail part of the business to also hold up. I think both these businesses have done phenomenally well, specifically the retail parts. I think Reliance retail number, both in terms of the absolute top line, along with the margins that they have done quarter on quarter, And we've still not entered the festive season. So I think Q3 is when Reliance Retail numbers will be even better as far as top line and margins are concerned. So on a consolidated basis, the expectations in terms of O2C doing well has held up. Reliance Retail has held up pretty well as well. And even on the Jio numbers, even if the ARPU is a tad bit below what the street was probably expecting or believing in, what you're probably seeing in traction as I'm going through the notes in terms of what they've released in the press note, the smartphones are expected to be picking up huge amount of speed as we move forward. And as the 5G rollout becomes even more consciously spread out over the next few quarters, an obvious increase of an absolute ARPU number can be expected, which can boost and bolster numbers going forward as well. So I would say a decent set, first cut from Reliance across its segments.
Okay, Mahesh, thank you so much for your analysis and the first cut on Reliance earnings. But with this, let me also welcome on board Sushil Choksi of Indus Equity Advisors. Hi, Sushil. Very good evening and thank you so much for your time. Your first cut on Reliance earnings seems like an inline set to us, but looking at the internals, what's your reading, Sushil?
Good evening. Thanks for having me on the show. Looks like the company's result on all divisions is firing on a positive note, led by oil to chemical, which has outperformed the expectation. Geo ARPU numbers are stable, and Reliance Retail, based on the expansion what they're doing, quarter on quarter things are getting better in terms of footprint as well as on margins is stable. And as Mayuresh just explained, the festive season is round the corner. The current quarter should show you the positivity of the entire expansion. So looks like going into the current condition, the result seems to be on a positive note to support the market.
Hi Mayuresh, Soumit joining into the conversation. So my first, if you see the O2C segment that we were talking about, yes, on a sequential basis, the numbers have come in at around 16,300 crore. It's a jump of around 6.6%. But going forward, given the fact that we have seen a sharp decline when it comes to Singapore gross refining margin, how's your outlook when it comes to the O2C segment? Because that is one of the cash cows for Reliance Industries at this moment.